Moving on with our project, so still under the third part, specific data to look for when analyzing major economies. We are analyzing economies of the United States of America, United Kingdom, Australia, Canada, and of course the Eurozone. And we're going to take a look at what are the important economic indicators to look for, when they are going to be released to the market, what kind of volatility implies, and how this can be treated with binaryoptions.net.au. You can find by looking at our different strategies on the website. You can find there either trading strategies for the currency markets, or trading strategy for trading binary options itself. So you can have a lot of things to learn from the website. Now it is time for the retail sales, and the retail sales are important in any economy because they show the difference in total value of sales at the retail level. It is important. It shows the health of the US consumer, and that's why market participants are keen to see the values of this indicator. It is calculated based on percentages, so it is coming percentage wise, and higher than forecasted value implies positive outcome for the currency, as the opposite is being true as well. Lower than forecasted values imply a negative outcome for the currency. But once again, this should be viewed more related to the risk on, risk off environment than to the positive or negative effect on the currency. This is a vital look at consumer spending data, and stronger or weaker retail sales, or even extreme values, it doesn't really matter the side, to the upside or to the downside, they should reflect in the GDP as they signal strength or weakness of the economy in that specific period of time the retail sales are referring to. So they show the change in total value of sales at the retail level. It is extremely important as it is the earliest look at consumer spending data, and all this project is going to be about how to have an educated guess regarding the power of the consumer spending. They are also called advanced retail sales, so sometimes market refers to this only as retail sales, sometimes as advanced retail sales. If the actual it is higher than the forecast, then should be viewed normally as a positive for the currency, and if the actual is lower than the forecast, should be viewed negative for the currency. The release time is monthly, on a monthly basis, so it's coming on a percentage release on a monthly basis, about 14 days after month ends, and the release time is 12:30 GMT during the North American trading session. It is a first year data. Traders are extremely interested to see when the retail sales are being released, as they are showing the power, early sign of consumer spending. They are extremely important. You should see such a release brings volatility, high levels of volatility, especially on UK, for example. We'll do that on the United Kingdom. They have quite an important effect on all the Great Britain pound related pairs. If you're looking at our 6-month period that we are interpreting under this project, then one can see that a trend can't be identified based on this period, with values fluctuating from positive to negative within that period, but with no clear signs of any kind of a trend. Now take a look here. We have the retail sales, and on the vertical here we have the percentages on a monthly basis, and then the 6-month period from February till July 2013. So you have, let's say, positive 0.1% in February, then 1.1 strong retail sales in March, then a negative to 0.4 in April, then 0.1 in May, then in June you have a 0.6, only for July to come with minus 0.4 in July for the retail sales. So all in all, we cannot have an educated guess, or we cannot have a trend. We did have a trend for this moves you 1 to 3 months for a positive trend or a rising trend, not a positive trend, but then market just moved to the downside, and the retail sales came negative as the consumer spending in the United States seems it is still suffering. Now the next indicator in line is going to be the PPI, and this is one indicator that is favored by all central bankers in the world. Why? The PPI stands for Producer Price Index, and it is a favored move of inflation. Actually, it is not the favored move of inflation, but it is one of the indicators to take into consideration when analyzing inflation, and inflation is on the deck for any central bank in the world. Each central bank in the world on that mandate, on their mandate, have the inflation fighting or keeping inflation into control. For example, in the United States, because we are talking about the United States economy here, the Federal Reserve of the United States has the mandate, as a dual mandate, to keep inflation below or close to 2% and to create jobs. Now, in order to keep inflation below or close to 2%, then any central bank should adapt economic policies, monetary policies, to fight those data. And this is why when this kind of indicators, the PPI and the CPIs, are going to be released, then traders look at them as extremely volatile levels. But that should come on the next recording. Things to take into consideration when looking at the retail sales indicators. Well, first of all, the release date, it is monthly, about 14 days after the month end, 12:30 GMT, no more, no less, during North American trading session. It is a first-year data, and it is vital for information regarding consumer spending, and that translates into health for the US economy. Based on the last 6 months, we cannot take any educated guess or any trend out of this move. So basically the analysis should extend for a longer period. Be my guest and do the analysis and see, maybe you can draw some important conclusion. Moving next to the PPI, Producer Price Index. So stay tuned for the next recording in a couple of minutes, please.